dollar on the sun. It has gained again most of its currency peers. And in today's session of Market Movers, we'll be taking a look on the USD JPY, which is likely to go on to touch 111 level. Of course, I'm not talking from the intraday perspective. It might take a couple of days. But now the deck seems cleared for the USD JPY to take off, and in course of time, we can expect the new swing high to be formed. Just a couple of days back, I had done this session with the title of USD JPY might be retesting the 110 level, and the target has been touched. We were looking at this possibility when USD JPY was consolidating closer to 109.5. So if any of you had gone in for that trade, I think you might be sitting on a pretty good amount of profit, and you can continue to hold on to the position, and we are likely to see this upward momentum continuing for at least next couple of days. If we consider the data topic for the day, we had plenty of data releases for major countries around the world. And since we have a lot of data for the US session itself, I will not be going into the earlier releases for the Asian and European countries. Now coming to the North American session, we got these weekly initial jobless claims, and for the first time in post-pandemic months, we have the reading below 400,000. So that's important development here. And for this month, for the last week, the week ended 29th of May, we have the reading at 385,000. And I think in coming weeks, we are likely to see it again moving on the lower side and this decline, and the trajectory of these downward numbers is likely to continue as the US economy has been doing well and is likely to continue to expand in coming weeks, coming months, and even coming years. We also got the US ISM non-manufacturing PMI data for the month of May, and the services sector expansion seems to be picking up pace. And if we compare it to the prior month's reading, the reading which we had for the month of April, compared to that, the pace of expansion has risen, and now for the month of May, we have these numbers at 64, which is quite robust and a lot higher compared to the prior numbers of 62.7, as more and more sectors in US economy are opening back for the business that has contributed to these record numbers for these PMI, non-manufacturing PMI, services sector in particular. We also scheduled to get the WTI crude oil inventory data in a while, and by the time this video gets uploaded, it might be already released. But since I don't have the numbers right now, I will go by the expectations of the most of the crude oil trackers, and we have the possibility of a drawdown of around 1.9 million barrels or thereabout, closer to 2 million barrels of drawdown is expected, and we have these geopolitical tensions. One, I think I'm not having in-depth details, but as I had reading news, the Iranian naval ship had caught on fire, tanker I think it was, and also some refinery storage capacity was also destroyed, and that has also contributed to this spiraling of the crude oil prices. In recent past, we have seen the light crude oil prices moving up, and these developments are likely to give additional impetus to this upward momentum. And if we see that the crude oil inventories are also on the lower side, then that will be added reason for the light crude oil prices to continue to rally higher. So I think the possibility of US $70 per barrel being tested is not really far off, and it might be a matter of session or two before we get the levels above US $70 per barrel. Now moving on to the technical segment, we will first see the outlook for the USD JPY, and once we are done with the currency side, we will also consider the equity segment, S&P 500 in particular. Let's start with the USD technical outlook. This is the daily time frame chart, and here, after spending many days, many weeks in consolidation phase, I think a breakout is happening here. And if you consider the chart formation, in today's session, we have this large bar forming here, and that gives us idea that this time around the strength, the momentum is quite strong, and we can expect the USD to resume its prior upward rally, and this consolidation phase might be coming to an end, and in course of time, in next couple of weeks, we can even expect the 112 level to be reached, as we have reasons to believe that after this breakout on the higher side, we can expect this swing high to be tested, and new swing high is likely to be formed, and 112 is not really far off. Looking at the consolidation, this extended consolidation of almost 2 months, which is there for the USD JPY, and in these 2 months, it didn't really drop much after this rally of more than 800 pips, and it's been consolidating closer to this 109 price area. And now that we have this breakout here, I am quite optimistic that our anticipation of this new swing high being formed is quite is on a sound footing, and if we are going to look for the trade, it should be preferably on the buy side. But of course, we will have to trade with the possibility of our anticipation going wrong, and that means we have to always look to optimize the entry and exit point for any trade. And here, if we have to utilize this lower time frame charting, we have the resistance in place around 110.4, and also the prior swing high, this high around 110.2 established in the last week, is likely to provide some resistance. So I think in this session, in today's session, it won't be a good idea to go for a long trade on the current levels. If you had taken the long trade in the Asian trading hours, then you can continue to hold on to it. But right now, taking the new position is not really a sound decision from the risk reward perspective, as our stop loss will be fairly wide. We will have to keep the stop loss below the immediate swing low, and that means our stop loss will need to be keep closer to the 109.5, and that enters the risk of around 60-70 pips from the current level. Instead of that, what we can do is we allow the USD JPY to run its course in its current rally, and after that we wait for the consolidation. As long as it is holding well above this immediate swing high, which is likely to act as the support, I think even if we keep a watch on this 110 price zone, we can we are likely to benefit. And if the USD has to run higher, I think it shouldn't really be breaking below the 110 mark. So for next couple of sessions, the 110 can be utilized as its new marker. As long as price action is holding well above it, we can be fairly confident of the continuation of the upward momentum. And if it doesn't really hold, then of course we can wait for it to correct towards this support of the central pivot point, which is around 19.4. So here the 50 and 100 SMA convergence can be utilized whenever we are looking to enter into a new trade, and as we have this sharp upward move, it will require more time for the 50 SMA to catch up, and that's why we need to lie low and keep on the waiting side, and allow these SMAs to catch up. And here, if we consider these prior price formation, I am expecting, as I said while explaining the 4 hourly chart also, the price band of around 109.9 to 110 to act as a near-term base for the USD JPY. And as I said, the SMAs are also likely to converge closer to the price action as more and more time passes. So with that in mind, I think the trade can be taken anywhere from this price marker, and the stop loss will have to keep closer to this immediate swing low or just below that. So the stop loss will work out from 109.5. And on the higher side, we can expect the USD to break above this price swing high and carry on to rise at least towards 110.5 or even beyond that, but that might take multiple sessions, and you never know, it can even happen in single session. But I would like to be cautious here and go for the trade only when we have the support closer to our entry point, and the stop loss should also be fairly sharp. Now moving on to the S&P 500 technical outlook. This is the daily time frame chart, and here we can see that the S&P 500 is failing to cross above this immediate swing high, this record high established closer to 4,240. In yesterday's session, I had talked about the possibility of the continuation of upward momentum in US equities. The focus, the analysis was for the Dow Jones Industrial Average, but that didn't really unfold well, and I think the stop loss was hit with the entry and the stop loss I had provided for yesterday's trade. So I think now that the scenario seems to be changing, it is no longer advisable to keep looking for the buy trade. Rather than that, given the sell off which we are seeing in today's session, I would like to change the price trajectory, and now we should be getting ready to short these equity indices, and S&P 500 in particular looks vulnerable, and that we can try to exploit to our advantage. So if we want to look for a trade, we will have to keep some key technical levels in mind. On the lower side, we do have the support of central pivot point 4,150, and this is where some buying is coming back and pushing the S&P 500 on the higher side. But I think if we allow the consolidation to take place and if we don't really see any fresh breakout on the higher side above the price high, we can expect this support to give way, and in course of time, even the S&P 500 price can drop below the 4,100 price area toward this first support of this month's 0.0 series. If you consider the regression curve, it has started to incline on the higher side, but now that the price action has shifted to the lower band, we can expect it to flatten, and it is likely to take time. And also, the optimum entry points to arise for this trade are also likely to take time. So I think we can take it easy and allow the S&P 500 to consolidate a bit more, and till that consolidation takes place, we can keep an eye on some of the key levels which can help us in finding the optimum trading opportunities. So here we will have to look for the trades anywhere closer to this convergence area of 50, 100, and 200 SMA, which is there around 4,200. And on the higher side, we can utilize these immediate swing highs, the highs formed around 4,220. We can utilize these as the stop loss. So here the risk is of around half a percentage point, and on the lower side, as I said, the 4,100 level can be expected to be retested by the S&P 500, and that is going to provide us the excellent risk reward ratio. So if you don't really get the entry precisely closer to 4,200, I think the price band of around 4,190 to 4,200 can be considered while keeping the stop loss, as I said, just a little above this immediate swing high. On the lower side, the risk reward ratio should be favorable enough for our trade, and as per the conservative requirement, we also look for at the minimum the risk reward ratio of 1 is to 2. So for the risk of around 25-30 pips points you will be taking, you will of course need to target more than 50 points on the lower side, and keep the stop loss closer to the 4100 level. So that's my take looking at the S&P 500's current formation. And even if you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. Do subscribe to the Ducoscopy webinar channel